So the stock market is crazy right now. We see tons and tons of stocks that were doing so well in 2020 and 2021 at their 52-week lows currently, especially stocks that take on more risk and stocks in the technology sector. Oh, and let's not forget Bitcoin and cryptocurrency. They're down pretty bad as well. So during these uncertain times in the market, it can be really easy to just give up and sell into the fear and just be out of the market completely, thinking that, oh, I sell out now, I will lose less money. Well, that is not always the case. And more often than not, if you do end up selling into fear, you could in fact lose out once the market does come back. In fact, there are many different studies that prove that on average, you lose more money than you make by trying to time these market cycles. So today we're going to be talking about multiple different strategies to protect your hard-earned income in this bear market. But before we start, there's one thing I need you guys to do for me. Smash that like button. Hit that like button right now. I'm waiting. I got all day, baby. So the main cause of uncertainty in the market right now is due to the Federal Reserve having to face the enormous amount of inflation in the economy and hike interest rates as well as taper their asset purchases such as bonds and commercial-backed securities. Therefore, this would take money out of the economy and lower inflation. Unless you're living under a rock, you'd know that inflation is out of control right now. It's at a 40-year high. We haven't seen inflation like this since the 1980s, creating a market, a stock market in particular, that is absolutely out of control. In fact, from 2020 lows, the stock market is still up 100% currently, which over a 2-year period, that's an insanely high return in the S&P 500. We also have tensions rising in Eastern Europe with the Russia-Ukraine conflict right now, which can affect markets across the world. This can affect things like wheat and energy prices, but could also affect things such as safe haven assets and bonds. So it's pretty safe to say that there is tons of uncertainty in the market right now, and uncertainty does in fact yield risk off, which is why we are seeing these markets decline. So if everything is just going downhill, then how can we exactly profit? I've come up with 3 different strategies depending on your risk tolerance on how to profit in these uncertain, risky markets. The number one way to profit in an uncertain market is to get rewarded without taking on any risk. And with Moomoo Brokerage, you can do just that. I'd like to thank Moomoo for sponsoring this video. They have a stock brokerage promotion where you only deposit $1. You can get up to $7,000 in free stock. Absolutely phenomenal. I mean, you're getting an amazing return on only depositing $1 on their platform, so it is totally 100% worth checking out. You make money in these markets without actually putting any money in. Perfect. The links below in the description or the pinned comment section. They also have an exclusive offering where if you deposit $100, you get an extra share of AMC stock. So again, you can get a return just by doing that. The promotion ends February 7th. But honestly, I think this regular promotion that they have, where all you do is deposit $1, get up to $7,000 in free stock, I think that's definitely worth checking out. The link's below in the description or pinned comment section. The first strategy, but also the most risky, is to go short or buy puts. But this also ties into the whole market timing fallacy that we were talking about earlier. And in the long run, doing this type of strategy, trying to time the market, can oftentimes lead to more losses than profits. But when the markets are going down, this is how you can profit off of them. So in order to figure out what is the best opportunity to go short or buy puts on, you have to understand what stocks are the most bearish. Now, I like to achieve this through the use of technical analysis and analyzing the whale options flow, which honestly is no simple task. It takes a lot of effort, a lot of homework, a lot of work, and honestly just a lot of time. I use this software called Unusual Whales to analyze the options flow, and you can see what people with big money are doing with that big money. So if they're bearish, they are buying these things called put options, which is essentially a bet that the stock goes down in price. Right here, I have an example of what I'm seeing on Unusual Whales. There is a link below in the description if you wanted to check out Unusual Whales. Use code Hootmoney at checkout. But anyways, we are looking at Netflix right now. We are looking at the trades from just today. We're looking at the premium of $10,000 or more, and we are looking at the straight buying of calls or buying of puts. What we can do is we can click show charts right here, and we can see the premium bearish versus bullish. Right here, you guys can see it was about 70% bearish premium. You can also see what dates they're targeting and what strike prices they're targeting. You'll need to understand options more to do that, but right off the bat, you'll see 70% bearish. Now, I like to align this with a technical analysis perspective, and I use Market Cipher, which is another software to do this. I don't personally believe normal technical analysis, recognizing chart patterns. I don't like that as much, even though it does work out for some people. Market Cipher, in my opinion, is way, way better. There is a link below as well to check out Market Cipher. And here you get to do more of a consolidated momentum trading strategy. So what we're seeing right here with Netflix is it is on red money flow. So that's the first part of Market Cipher. If there is red money flow, that means the chart is bearish, right? And right here, you guys can see green money flow, which means that the chart is bullish. So what I'm seeing here is red money flow. We also use these blue waves. The blue wave is on an upward swing, meaning that the momentum is on the upside. We can also see that it's been trending up today. It was actually up about 7.5% today. I don't believe that the news that brought this up was in fact solid news. It was just a hedge fund manager that was buying this stock, and the stock rallied ever since. As you guys can see, it went down in after hours yesterday. It came shooting back up, closing the day up 7.51%. And again, the options flow was pretty bearish. So using my context clues, the stock is up. That is a better opportunity to go short than when the stock is down. So due to this, I do believe Netflix will be coming back down tomorrow. So at market open, I can profit off this by buying a put option or going short on Netflix stock. Now you need to understand the risk involved in going short. This opens you to unlimited risk, right? A stock can go up unlimited amounts in value, right? It can go to $100,000 per share if someone is willing to pay that price. It doesn't always happen. In fact, there's usually a point where it kind of caps out, but you're still open to unlimited risk. If you're going long on a stock, you can only lose as much money as you put in. So if you paid $10 for a stock when going long, you can only lose $10. But if you go short on a stock and it goes up to $90, then you lose $80 per share. So it's definitely ideal to use risk management by using stop losses when going short on a stock. The other option is to buy a put option, more complex, more risky, but there is limited risk. If you buy a put option, you can only lose the amount of money that you put in the put option, no pun intended there, but it's less risky because there's a capped amount of money that you can lose. Now there are other risks as well, such as time decay, volatility, crush, etc. And I honestly think buying put options should be reserved for advanced traders or experts. The second way to make money in a bear market or a stock market crash is to average down on some of your long-term investments, bringing down the cost of those stocks, or just finding undervalued, fundamentally solid companies that will explode once the bull market does in fact come back. So I actually did post a video earlier that you can check out, hitting that link, that bookmark up there in the top right hand corner of your screen, where I talk about a company that I think has some asymmetric risk to reward currently. You can also put your money in not so risky dividend stocks that pay a handsome dividend increases every year, a lot less risky, a lot less volatile. You can have dividend reinvestment on as well, so those dividends compound and you earn more over time. Or if you want to dabble in cryptocurrency, you can actually earn interest on your stable coins. So these are these one-to-one pegged to the US dollar cryptocurrencies. So there is increased risk there because they aren't FDIC insured. However, you can earn up to 10% on your stablecoin. So if you deposit $1,000, you get $100 back in profit in a year, which is honestly a pretty good bet. But remember, it's not FDIC insured. If the crypto company goes under, you lose that money. Then the third strategy that I have for you guys is to look for companies that potentially may get acquired. Now, this is easier said than done. It's also incredibly risky, so swim at your own risk. But an example of a stock that I like that fits this category would be Peloton Interactive. I think this company is going to get acquired from a big tech company such as Apple. There actually is a rumor already that Apple will be acquiring it, and it did jump up on that rumor just the other day. Now it's back down, which shows the importance of shorting or buying puts on these spike ups. As you guys can see, when a stock is downtrending, a lot of the time the spike ups are an opportunity to go short. But long term, being at such a deep discount from its all-time high of $171 all the way down to $24 per share, I do believe Peloton will likely get acquired because it's trading at such a cheaper price right now. It's a household brand name, and if I were a big tech company, I'd probably want to acquire this intellectual property at a deep discount like it's trading at right now. So the number one thing I want you guys to understand is that short-term price action does not mean that the stock is permanently down. In fact, there are many different scenarios where a stock has gone down over 50% in a couple months just to rally back up to all-time highs and beyond in the coming years. So the micro perspective might make you want to sell out of your stocks now for a loss and get out of this bloody market. But if you take a macro approach to this and start thinking extremely long term, you'll understand that these swings in your portfolio value almost mean nothing, and at the end of the day, the people speculating on these swings might in fact lose more money than you that just holds and consistently buys into the market. A perfect example of this is Tesla in 2018. As you guys can see right here, Tesla was trading at about $75 per share in December of 2018. It dropped all the way down to about $36 per share, a minus 52% loss on your Tesla investment in just a few months. But if we look more macro here, right, you can see that Tesla is now trading at over $800 per share. So you need to have that long-term perspective. If you don't, there is a decent chance that you sell for a loss, and in the long term, you just get swallowed up from the opportunity cost of selling way too early as the stock goes to the freaking moon and beyond. So don't be the one sitting on the sidelines when your stock is going up like crazy. Anyways, my friends, that's about it. I hope you guys enjoyed. If you haven't already, drop the like on the video. It's always very highly appreciated. It's actually the number one thing you guys could do to help me out on this YouTube channel, help out with the YouTube algorithm in general. I appreciate you guys. If you watched through, extra brownie points for you. Subscribe to the channel if you guys are new. If you want to see my trade alerts each and every single day, you don't want to short the market yourself, you don't want to buy puts yourself, you can sign up for my trade alerts using the first link below in the description, and I will be doing due diligence each and every single day in this bloody market, looking for opportunities so that we can all profit together. Again, guys, it's that first link in the description below. Anyways, that's about it. I hope you guys have enjoyed. I'll be seeing you guys later. See ya!